U.S.-China trade tensions are flaring again, and this time so-called choke points are the focus, including rare earth minerals and semiconductor technology. And my next guest says this isn't just a trade dispute, it's really a strategic contest over industrial might, technology, and economic power. Kevin Hebner is Managing Director and Global Investment Strategist for TD Epic, and he joins us now in studio. It is lovely to have you here.
Oh, thanks, Kim.
I should give you credit where I was going to say the choke points we talked about this is what you told us, that you believe these are the things we should look at. But I want to start with the fact that you say despite everything that's going on, that nothing fundamental has changed.
Yeah.
And what do you mean by that?
So stepping back a little bit, we had a long period of hyperglobalization, U.S. hegemony, where U.S. was clearly dominant in the economy, technology, defense capabilities. Then we have the rise of China, which in many ways is terrific, but it challenges U.S. power in all those three dimensions. And so as a consequence, you have a lot of pushing and shoving going on in some degree of decoupling of the economies. And what's going on is part of that, the weaponization of interdependence in areas like leading edge semis, rare earths, and so forth. So it's part of that, but overall where we're going and where we're heading is these two economies learning their new relationship, which would be partly decoupled, and eliminating the choke points that each can use against each other. And there's choke points going both ways. So we've got this underlying story, and then we've got ripples going on like we had Thursday and Friday with announcements from Beijing and DC.
I want to, there's so much to unpack here, but let's just start with, you brought a chart and I want to bring it up. This is showing us the effective rates, tariff rates on imports, I believe. So tell us what we're looking at here and why you think this is important to point out.
Yeah, so this illustrates the taco trade that Trump always chickens out.
Yeah.
So as you remember, on April 2nd, Liberation Day, Trump imposed tariffs on a host of countries. China went over 100% on this. China then tightened the supply of rare earths to the United States. One consequence quite early was that Ford had to close a factory. Ford employs a lot of people, a lot of pressure on Trump as a result, and then he reached out to Beijing and made concessions. So Beijing started supplying those rare earths again, and Trump, as you can see here, 2 months later reduced the tariff rate from 110% to 40% where it is today. So a big question through all this is who can stand the most pain? There seems to be some evidence that Trump can't stand a whole lot of pain, hence the taco trade. Whereas for President Xi, he has this firm, deep-seated belief that the Chinese nation, the Chinese people, can tolerate a lot of pain. And that's sort of a founding myth of the CCP. There's recently a book that came out about President Xi's father. The party's interests always come first. We can always take a lot of pain, and this strengthens us, and that's important. So if it does come to push and shove between DC and Beijing, most people think that Trump is most likely to make the concessions first.
Interesting. It's fascinating. Yeah. You talked about choke points, and maybe if you could just tell us a little bit more about why you think they're are these just the levers that they can point to kind of get these things going? And just define the choke points as you see them too.
So if we're in a hyper-globalized world and we're trading with each other all over the place and we're friends, we're singing Kumbaya, so we can have outsourced and complex supply chains all over the world, and we don't have to worry about risk and vulnerabilities and choke points. But now we have a situation where we have two existential adversaries who are very interdependent, and there's a lot of these interdependencies that can be weaponized. So for China, they're weaponizing rare earths, this industry that they've built up over the last 30 years, and there's a host of other industries they can weaponize as well. And the US is weaponizing leading edge semiconductors. They've threatened to weaponize, for example, the US dollar-based global financial system. And then there's particular products that the US can weaponize that China needs, things like advanced aircraft engines. That's sort of a nut that China hasn't yet been able to crack. So on both sides, there's a lot of choke points, a lot of vulnerabilities, and they do have to learn how to get along in the interim. But ultimately, the end game is we eliminate these choke points, and both economies, the economies and their allies, are independent in these areas of vulnerabilities. There can be lots of areas like toys and textiles and food in which they can trade without worrying about vulnerabilities. So there still will be a lot of trade between China and the United States, a lot of interaction, but it won't be in these areas that have national security implications.
Right.
It's really national security implications that's important here.
I want to bring up another chart here too, because you were explaining to me, and I didn't know this, talking a bit about the reserves of rare earths. And this is not that they're just located one place, but these are economically viable. So they've been scaled and are producing. And why does that matter?
So given across the Earth's crust, there's rare earths and critical minerals everywhere. But some countries have put in place subsidies, environmental policies, and sort of a skilled workforce to make these economically viable. And of those currently in the world, China has about 50% in terms of reserves. They're actually mining about 70%, in processing over 90%. Then we have other countries like Brazil and India. This data is from the US Geological Survey, just came out in 2025, last year's data. But according to them, Canada produced 0 rare earths last year, 0. They have economic reserves, about 1% of the global total. But in terms of potential, Canada has a lot. So in Northern Ontario, near James Bay, in Saskatchewan, in Alberta, and in other places. So this is an area, I think it's a real economic opportunity for Canada. There has to be discussions in many cases with Indigenous communities, with environmental agencies, but I think it is an area in which Canada has a lot of opportunity, and also opportunity to show that they really are allies with the DC administration, and that DC in a number of areas needs them.
4 things I want to understand. Number 1, the choke points, as they get sorted, which industries are at risk?
Well, specifically with rare earths and critical minerals, there's a lot of industries that are downstream to that. So pretty much anything that has a motor, electric motor or magnet in it. So it's a lot of industries. So cars, EVs, drones, robotics, it's a lot of stuff will be affected by this, including anything in the defense sector and leading edge semiconductors.
The counter to all these choke points happening is what you mentioned earlier about everyone trying to, for national security reasons, getting more involved in these industries, which means, and you highlight, there's a quiet shift moving towards state capitalism, common in China, not so common in the States, but it's happening.
Yeah, and so Trump has flipped that on its head. We had Reagan with his famous 10 words, the most dangerous 10 words in the English language, I'm from the government and I'm here to help you. And so there's been the suspicion that the government can't make things better, that markets will sort things out. And there's a realization that, no, that isn't the answer. And so we need the government. And over the last 6 months, we've seen the government get involved directly in a host of industries, pharmaceuticals. And pharmaceuticals is one of the choke points that we have from China. So that makes sense. Semiconductors, even building ships, the ships that go on the water. But a host of industries, there's at least 10 now, that the Trump administration is making serious investments in and getting more involved. And I think any of these sectors with national security implications, where the vulnerabilities are, we should expect the Trump administration to become more and more involved in many cases having a seat on the board of directors.
What is, in the short term, we say, yes, understand national security reasons. What are the longer term implications of that? When I think back to my days of basic economics and allocation of capital, it generally wasn't very good.
Yeah, so the US has a number of real strengths, say relative to China, leading edge semis, the best software in the world, the best capital allocation in the world, the best financial markets, and some other things. So we're really saying that if a company has 2 purposes, one is to its shareholders, the other is to its state, then the allocation of capital is going to be less good. And so in China, for example, you have companies like BYD and CATL, wonderful capital allocators, return invested capital way above WACC, they're great. And then you have the biggest semiconductor company, SMIC, SMIC. It's a terrible capital allocator, 0 return invested capital, because its primary mission is to the state. And so there are going to be companies that their primary mission isn't to shareholders, it's to the government. Their capital allocation is going to be pretty bad, the returns are going to be pretty bad. And so this is going to be something that shareholders in US markets need to be thinking about, and you really haven't had to think about it since at least Reagan.
Yeah. So what are the opportunities and risk? And let me just ask straight out. I mean, the markets have had an incredible run, powered a lot of it by AI. And how does this affect that?
So we're still, would say, short the dollar, US dollar, because the US cannot rebalance with the dollar, in particular dollar China, where it is today. Secondly, leading edge tech in the US continues to be great, and it's existential. So the Trump administration will continue to favor and deregulate it. That's interesting. A third area will be the supply chain, industrial supply chain, so industrials materials. They need to be home shored and they need to be built up. So that's going to be a very interesting area. I think for companies outside of those sectors and tech, investors should diversify out of the US because we are seeing that there's enormous valuation premium for US companies that doesn't really look justified by fundamentals. And there are attractive global champions in Europe, in Japan, and in China they should be looking to. And then the fifth thing would be infrastructure. Through all these themes, all the infrastructure that's going to be necessary in the United States to build out the industrial supply chain. It's a fantastic area. It has been for a couple of years, and I think it continues to be. So this has really important implications, I think, for how investors are viewing their portfolios.
It sounds very positive economically, and you're just seeing growth in so many different places. And again, what you're saying, just the states just have to kind of watch some of the valuations. There's a lot of good news. You mentioned there's also some timeline risk. I mean, it doesn't mean everything doesn't always go straight up to the right. So what are you watching?
So we have a number of the key dates here. So October 31, this is when Trump and Xi are supposed to meet in South Korea at the APEC meeting. Trump has said he might not meet because he doesn't see the point. Prediction markets are saying they're going to meet. The next day, November 1, Trump's threatening to increase tariffs on China by 100%. Prediction markets are saying that's not going to happen. I think that's fair. November 10th, the 90-day pause for increasing tariffs on China, that's been extended twice in May and then August. Betting markets are saying that gets extended again. November 28th, this one's a bit more complicated, sort of an affiliate rule dealing with the entity list. In all likelihood, this moves ahead. And then the final one, this is the announcement that China came out last Thursday, is the controls on rare earths. Betting markets saying this happens. Maybe it gets toned down a little bit, but it happens, and especially applies to leading edge semiconductors and defense uses of the rare earths China is exporting not just to the US, but really their primary focus is the US.